What's up, everyone? In this video, we have a lot to talk about as the stock market is just getting destroyed right now. There are so many stocks that are just breaking 52-week lows. There's just so much selling pressure, and it's been brutal lately. So we have some good news and we have some bad news. Stick with me to the end. We're going to get right to the point, but it's been a tough market lately, to say the least. So we can see we have this article from Yahoo Finance. Let me just go back. We can see article that says the NASDAQ is quietly being shredded. Nearly 40% of NASDAQ stocks are down at least 50%. That is huge. One, being down 50%, but then also two, nearly 40% of NASDAQ stocks, like that's a lot, and it's not good. There's a lot of selling pressure right now. If we head over to the NASDAQ, I guess you can say visualization on Thinkorswim, like we have a lot of companies just really hurting. And what's weird is that if we look at the market overall, like the SPY, it's kind of holding up. But if we're being honest, it's really only holding up because like the top players like Apple, Microsoft, and Nvidia are really just the only things holding the market up. But if we look at other companies like PayPal or Zoom or a lot of other options, it's just brutal. And there's a couple reasons for this. I would say the main thing was initially the fear of rising rates, but that ended up turning into, I guess you can say, a worse problem. So basically, when rates rise, that hurts the current valuations of a lot of growth companies and a lot of tech companies normally. If we look at like rates, like if we look at like /ZN, this is the 10-year Treasury note futures. Basically, the lower this chart goes, the higher interest rates are. So we can see over the past couple months, rates have definitely been rising. And plus with the Fed's tapering and maybe even raising rates soon, it doesn't help the current day valuations of tech and growth companies especially. With that being said, a lot of that was already priced in. Like we looked at Zoom or DraftKings or Square or Palantir or Corsair or Chewy or Redfin or almost any other growth company. It has been selling off for months in anticipation of this, I guess you can say, negative rate news. But now it is kind of transformed into something a lot worse, a more big of a problem. Basically, while we've been seeing stocks fall, we've also been seeing, short sellers capitalize off of this, I guess you can say, catalyst, right? So when stocks are falling, shorts have been also doing pretty well lately, to say the least, unfortunately. And when short, the stock normally falls. And then on top of that, when the stock falls, people have been like holding a lot of these growth plays, get scared, and unfortunately sell out. So for example, if we look at Zoom, like even though it was really overvalued back in 2020 when it was at $588 a share, now it's at $158. It's at a good level. They're making a ton of money. They're doing great fundamentally, but the stock's still falling. We're seeing, shorts obviously capitalize on this. There's not a lot of buyers because of fear of rising rates, but now people who've been holding this stock, let's say at $450 a share or $500 or even $300 a share, are selling out, which makes the price drop even more. And it's not just Zoom. It's, any company. You can say Palantir, DraftKings, Corsair. You can say AI. Like even if we look at like a company like PayPal, like even this has been struggling. Square's been struggling. Like there's a lot of selling pressure coming in, and that's obviously not good. That's the bad news. The good news is that we would like to think that the worst is behind us. If you can withstand, like let's say we look at like Zoom, for example, if you can withstand a drop from, let's say, 588 all the way down to 158, most of the bad's already behind you. And you can say the same thing with like DraftKings. I know I cover DraftKings all the time. Like over the past couple months, we saw it drop from like 65 down to 23. Like you would like to think that the worst is already behind us. So the good news is that you would think that a majority of the selling pressure would be gone. But of course, that does not mean this is the bottom. These stocks are selling off big time right now. Then again, no one knows the bottom. Then again, though, with all the selling pressure happening right now, there is a buying opportunity. Obviously, we've been saying this for a couple weeks, but for me, companies that I love, or you guys already know, like DraftKings, Zoom, Palantir, companies like that. But for you, it might not be those companies. It might be other companies like PayPal or Square or something else. But whatever company you like, odds are it's at a pretty good deal right now, and it's probably good for shares. Your best bet would probably just to at least establish some sort of long-term portfolio. I know it can be tempting to trade like short-term speculative things right now, but there's a lot of great stocks at great levels. So if you could just buy the dip and just kind of forget about it for a little bit, in my opinion, that would be the way to go. If we look back throughout the S&P 500 over the past 3 years, the biggest opportunity was when everyone was I guess you could say the most fearful. We could see the SPY dropped all the way down to $218 back in March of 2020. Now it's at $462. But here's the thing. When it was at its lows in March 2020, everyone was scared. The pandemic was going on. People were uncertain. But then again, the people who had the highest returns with the SPY over the past couple years are the ones who bought during peak fear. So all I'm trying to say is, if you have a company that you like, odds are is that it's at a good level right now, and grabbing shares would probably be ideal. Another thing is rising rates generally are not good for growth companies, but then again, you would think that it would be priced in mostly. But then another point is that how we have this selling pressure continuing to accelerate. It's kind of like a snowball effect. For example, if we looked at a company like Zoom, we could see over the past year, it's been struggling a lot, even though the company has been doing very, very well fundamentally. The thing is, though, is everyone sees this constant selling pressure. People are scared to buy the dip, so less buyers come in. And people who've been holding shares of this one, they see this constant falling. Like, let's say they see the stock falling from 450 down to 250, and they say, all right, what's going to stop Zoom from falling from 250 down to 100? And people just sell out. So there's definitely an opportunity buying during, when people are fearful. I think shares are the way to go. But besides that, guys, the market's crazy right now. Definitely take a look at some stocks or some longer term plays. There's a lot of stocks at great levels. Hopefully this is hopefully we're getting towards the end of this absolute destruction, though, because it's been a rough couple months. So hopefully we get towards the end pretty soon. There is an opportunity buying the dip, but that's it for today, guys. I really appreciate all of you guys watching, and have an amazing weekend.